This is exercise 610 from the end of chapter 6 on bank reconciliation. And I know students reported that when I asked y'all to tell me one of the three things you thought were the hardest or least comprehensible, bank reconciliation made the list multiple times. So I think the book makes this seem a lot more complicated than it actually is. And in this day and age, it's probably, let's just say it's different because so much more of it's done electronically. But the idea behind bank reconciliation is simply to take what the bank says, adjust it for stuff the bank doesn't know about, and then figure out how much cash you actually have. Most of y'all don't write checks, but a lot of businesses do write checks. So when you write a check, there's a lag in between when the check's written and when it's actually cashed. So, yeah, but you want to recognize that because you don't want to write checks just because there's a balance in your checking account. You want to make sure that there's going to be enough balance in checking account to cover the checks when they get there. So it's a lot more prevalent in business than it is in our own personal lives, but still. And then, of course, when you get the bank statement, what you need to do is reconcile the bank statement, make sure it matches what your accounting statements are. That's because you don't know what the bank's going to charge you for certain things until you actually get the bank statement. Now, a lot of this other stuff, like non NSF funded checks and stuff like that, you actually find that stuff out fairly quickly because of electronic banking. But still, this is the process, whether you go through the bank statement or you go through every day and then check everything against the electronic statement. So in this 610, as of June 30th, the last bank statement showed a balance of 19,500. The unadjusted cash account balance was 15,200. And then they gave you some more information. They got deposits in transit. The bank doesn't know about those, you do. There's a credit memo in the bank statement that they told you that you earned interest. That's not reflected in your accounting statements yet because you're just now finding out about it. You have an outstanding check. It means your firm wrote a check for $66.90, but the bank doesn't know about it yet. And there's a debit memo for a service charge, which means that the bank knows about it, but your accounting books don't. So determine the true cash balance by preparing a bank reconciliation as of June 30th following using this information. Okay, so bank reconciliation, just you start with the unadjusted balance. And this is what the bank says. And the bank says that you got $19,500. Yeah, the bank says you got $19,500 in the checking account. Okay, you want to add deposits in transit. That's just the information that you know about that the bank doesn't know about. So you've made deposits of $2,400 that haven't shown up on the bank statement, and you have also written a check that hadn't cleared the bank. Spell check works when it wants to. All right. So that would be 6,900. So if I sum all that up, that's bank reconciliation, 6690. Okay. That's basically bank reconciliation. The bank says you got 19,500. Add in deposits the bank hasn't recorded yet. Subtract checks the bank doesn't know about yet. And that's 15,210. Now, if we do the same thing with our cash balances, all right, these two in green are the ones that the bank doesn't know about. But this is stuff that the bank knew about that has not shown up in our accounting statements yet, okay? So the bank reports that we earned some interest and there's a service charge in there. So if we start with the accounting books, the cash balance unadjusted, or pre-adjustment is probably a better word. The account balance was $15,200. Add interest earned, $30. Subtract bank charge, minus 20. And of course, they're going to match because these are simple problems. In the real world, when they don't match, you spend all day tracking down $3. But generally speaking, this true cash balance, you ought to have the exact same number either way. And if you don't, that's when it gets tricky. And you have clerical people or bookkeepers to go around trying to track stuff like that down. So if you're wasting accountant time doing this, and accountants get paid a lot of money to not do this. They get paid a lot of money to supervise bookkeepers who do. But that's the whole idea of bank reconciliation. You just want to make sure that you know how much is available. All right. So when we say true cash balance, that'd be the spendable cash balance. I would use different words than an accountant. Spendable cash balance is probably a better description.